The worst thing Yellen could do is backtrack on the dovish stance and dismiss a hike. Christopher Weafer. Chris, one of the events likely to shape market psychology this week is Yellen's speech to the NY Economic Club. The question of the FOMC's credibility has been raised recently, with some saying they have overpromised and underdelivered. But what do you think?
The markets will now be looking at Janet Yellen's comments tomorrow to clarify the position. I think the worst thing that could happen is if she were to go back to a dovish stance and dismiss any possibility of a rate rise, in the near term. That would contradict what other senior members of the Fed said last week, and I think it would again cause a lot of confusion in the markets. Whereas if she were to confirm what her fellow members said last week, then I think we could probably see the dollar rising on the back of that, as expectations of a Fed rate rise in the second quarter would certainly increase. So tomorrow's speech is certainly very, very important. I would imagine that she will condition her comments, even if she is kind of slightly more hawkish that a rate rise is more likely than not. That I would imagine she will condition it on referencing perhaps economic trends. And of course, we have the monthly US non-farm payroll numbers coming on Friday. So if we were to get good numbers on Friday after Janet Yellen kind of turns slightly more hawkish tomorrow, then I think a rate rise in the second quarter would be built in and would generally see the dollar rising throughout this week.
We will have more clues as to the state of the Eurozone this week. Political uncertainty seems to be the main concern of late. But do you think the looming data will at least serve to justify the ECB's recent action?
The huge concern and the huge doubt, and therefore is the dominant driver of sentiment towards the euro and eurozone assets, is what happens next in regard to terrorism and the refugee crisis, and also, of course, on top of that, after the recent regional elections in Germany, the question marks over the political sustainability in countries like Germany in particular, and quite frankly, I think it comes down to people now beginning to worry quite openly about Chancellor Merkel's position and how much power she really has and how that might evolve this year. So when you analyze it, and you're looking at markets right now for the rest of the year, there are enormous and red flashing lights over Europe, and which look like they're going to get worse rather than get better. And therefore, I think that if we were to get some clarity from the Fed this week and eliminate some of the confusion that we've had, then I think this year would be another year where dollar assets will dominate, because it'll be the safer bet, notwithstanding the uncertainty of the November election.
One of the other phenomena affecting the market pertains to the Japanese yen. Speculators in the futures market are holding a near record amount of gross and net long yen. But what other currencies are worth keeping an eye on this week?
Well, actually, just on the yen, you're absolutely right. And it does certainly fall into the category of how the world changes quite quickly. A couple of years ago, you couldn't get anybody to touch the yen with the proverbial barge pole because of, the state of the economy. But now, as the concerns over the Fed and over US generally, but particularly over Europe, the yen has attracted these net long positions because it looks like the safer option, the haven, as it were. So other currencies, well, I think that of course, looking at Russia and the oil producers, I think the dollar does have an impact on commodity prices. And if the dollar were to rally this week, especially after we got some kind of weak rig numbers and still high supply numbers, you could see the oil price coming back, by anything up to 10% perhaps over the next week or two. And that, of course, would undermine then the commodity currencies, the Russian ruble and Norwegian krona, and the Brazilian currencies that are affected by commodity prices. So commodity price weakness, I would say, over the near term is more likely than commodity strengths, and I think that undermines those currencies. Otherwise, I think investors are basically scrambling around looking for the so-called havens. If you were to get some further uncertainty from the US Fed, perhaps after Yellen's statement tomorrow, on the back of continuing uncertainty or worsening uncertainty into Europe and an already, high position in the yen, then my guess is that that would favor some of the more independent, safer currencies such as the Swiss franc. In particular, but currencies like that, I think investors would start looking for them. Unfortunately, it's not going to benefit sterling, of course, because in the list of countries with major uncertainties, the UK's EU referendum, of course, sits very much on top of sentiment towards sterling and would generally expect to depress sterling, I think, in the run up to the EU referendum in June. So you are getting to the point where there are not that many places to go, particularly for large volume investment flows. And I think that really does come down to it this week. If we get clarity and consistency from the Fed, you are going to see substantial flows back to the US dollar. If we get increased uncertainty from the Fed, then I think it's more likely to benefit gold bullion and one or two other kind of traditional sort of haven currencies like the Swiss franc, and possibly continue to attract more money into the yen, simply because right now it doesn't seem to have the same level of uncertainty as the other major currencies.
Chris, thank you for your time. Well, viewers, keep informed of all the latest currency moves by clicking back for our hourly updates. For me and for now, though, it's goodbye.